Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 19th of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. Quite a quiet session in Europe, neither the euro or the pound sterling really moving of any consequence against the US currency, but there was movement in the Antipodes. The Aussie dollar gaining 0.15% against the greenback, and its near neighbour the New Zealand dollar adding 0.32% against the US currency. Japan, the yen, well, that weakened again, 0.22% down against the US dollar, 112.43 trading in dollar yen shortly before we recorded the video. Are we going to see a bit more activity in the end, in the yen even, in the coming weeks, I wonder. There was also activity in Canada and Mexico. The Canadian dollar down by 0.17% against its US rival. The Mexican peso down by 0.13% against the dollar as well. And there were gains for the dollar in Asia elsewhere as well, and against emerging market currencies. So a 0.53% gain against the Korean won. The Singaporean dollar down by almost 0.2% against the US dollar. And the South African rand, having been fairly strong over the last week, down by 0.13% against the US currency. Okay then, what's on the calendar? Events that may move the markets today. Quite an interesting calendar today. We've already had a raft of data out of China earlier this morning at 2 o'clock GMT. There were retail sales data, industrial production numbers, and of course the key gross domestic product data for the third quarter as well, and we'll look at all of those in a bit more detail momentarily. There is a speech to come from the Bank of Japan's Governor Kuroda kicking off at 06:35 GMT, and that will be followed at 8:30 GMT by GDP, UK public sector net borrowing requirement details for September. So a look at the UK government finances in the month of September. Then we take a break until 12:30 and we hop over the Atlantic to Canada for an absolute raft of consumer-facing data. Retail sales, ex and inclusive of autos for August, accompanied by a whole raft of inflation measures, CPI, core and non-core for September, and the Bank of Canada's own CPI price index data for that month as well. Then at 1300, the second of the day's central bank speeches, this one from FOMC member Kaplan, and at 1400, the small matter of existing home sales in the USA for September. US housing market coming under increasing pressure from a series of weak data points, and that might be the one weak point, the obvious weak point anyway, in the US economy currently. At 1600, we'll have our third central banker speech today, and this one is FOMC member Bostic. And then at 1610, it's the turn of the Governor of the Bank of England, Mark Carney, to give us a speech. And finally, at 1700 GMT, the influential Baker Hughes US oil rig count. The survey shows the number of active drilling rigs operational in the USA in the preceding week. Okay, breaking news and comment then that's caught my eye overnight. And first of all, China's Q3 GDP comes in below forecast on an annualized basis at 6.5% versus expectation of 6.6%. However, the September industrial production data also fell short, but retail sales in the country for September beat forecast, and I think I'm right in saying they posted a 5-month high. Japanese inflation, however, has fallen to just 1.2% in September, down from its 1.3% print during August, and of course both prints well below the Bank of Japan's 2% target, which might help it to explain some of that yen weakness we saw earlier. And staying in Asia, China and South Korea will meet for talks today on North Korea and its denuclearization plans. Right, time for food for thought and something for you to take away with you into the trading day and beyond, and why not think about this? US investment bank Morgan Stanley wrote on the headwinds facing US and global equities in the months ahead earlier in the week. One of the headwinds is the contraction of central bank balance sheets as QE programs are withdrawn and monetary policy is normalized. Morgan Stanley expects global central bank balance sheet growth to be negative by the end of 2018. And the chart here from Yaldini Research shows what Morgan Stanley are talking about. Look at the sharp decline in the size of central bank balance sheets that we've seen this data up until the end of September. But as I say, Morgan Stanley are expecting this trend to continue and move into negative territory just as we turn the cusp of the year. Don't forget that even now, the ECB, for example, is pumping 30 billion euros into the markets on a monthly basis. When that tap is turned off in December, there will only really be the Bank of Japan's QE program and a small program from the Bank of England of any notes active anywhere in the world. So that is a big change in terms of liquidity and market forces. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about the risks involved or the suitability of trading leverage products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning thoroughly. Thank you for your time.